So I want to thank everyone for coming to the 2-week syllabus training for day 3. This is our second class, day 3. Today we're going to be going over trend identification and market structure. So before we get started, does anyone have any questions that they wrote down or any specific sections of a video that you just completely did not understand? No?
Do we just jump in?
Okay.
Yeah, I have a question.
Okay, what's your question?
So
Video 1 for trend lines at the 1201 mark. Unless I missed it, he never really explained where trend lines form, or why they form rather.
At 1201?
Well, that was where I marked it. I think it began a little bit before then, but
Okay. All right, I'll make sure we cover that. Anybody else?
I was just going to ask, how do you get the class 1 if you missed it yesterday? I guess that's when it took place.
That video is, I don't think I uploaded yesterday's video in the Facebook group.
No, because I was looking, this is Ebony, I'm sorry for interrupting. I was looking for it to, I had to leave the call a little bit earlier to go on the Zoom, and it wasn't there.
Okay, yeah, okay, so when we do these classes, I have to upload them from Zoom, download them from Zoom, then upload them to YouTube, then upload them to the Facebook. It takes quite a bit. It takes a while for all of that whole entire process to take place. And I don't think I posted the YouTube link on the Facebook page. So I'll make sure I get that link up there for class 2, day 2. And day 3 will be up there tonight too. Sorry about that, you guys.
So day 1, 2, and 3 will be up there, you said?
Yes.
Okay, thank you.
Yes. Now, whenever you're looking for the classes for this session, we've already had a class that came through, and all of those classes are in there. So you're going to be looking for the ones that's going to be titled Class 2.
Okay.
Okay.
All right, thank you.
No problem. Anybody else? I apologize, you guys. I'll make sure I get that up as soon as we're done.
Doing the best you can. We understand that, especially if it's time consuming. We get it. But there is one thing. Yeah, there is one thing. I just have a problem when I look at a chart where to start at. You know, I was saying it, but I wasn't really getting. How do you just pick out an area and then start marking from there? You know what?
See, what probably has you confused on that is because you got to realize that the videos that we're watching, when he goes to a chart, like this is just any area in a chart. It could be like 2 or 3 months from whatever day he was doing that chart, or 2 or 3 weeks. You just go to a section of a chart.
Okay.
So when you come to a chart, you're going to see where price is currently. And that's where you want to start.
That's what I needed. That's okay. Now, yeah. Yes, thank you. Thank you.
So I could see where that could be confusing, you know, because you got to think like they're trying to show you multiple examples at one time. So they have to go to a section of the chart like way back in order to keep showing you example after example after example after example.
Okay, so basically they showing us on the chart, it's like that's pretty much where the price is right now. Not everything to the right of that where it actually really is, right?
Right. So when you first go to the chart, what you will see where price is currently. Everything to the left of it has already happened. What's closest to it is what recently happened, depending on what time frame you're on.
Okay.
And it'll make more sense once we get into like the time frames.
Okay. All right. Thank you.
No problem.
Andrea, I was going to ask that as well. How far back should we go? I see that there's that 1 hour window, or when we're looking at trends like that?
Yes, so those are multiple time frames. You have the monthly, you have the weekly, you got the daily, and then the time frame hours can go down from 12 hours all the way down to 1 minute. So you're going to learn how to do what we call a top-down analysis. It's where you're going to start on a higher time frame and mark your chart up and work your way down to take your trade on a smaller time frame. That's where you're going to look for your entry. And I know probably some of that is probably way over your head, but it'll make sense as we go. We just haven't reached that section yet.
Okay, so the mud will get clearer.
Yes,
Thank you.
no problem. Anybody else have any questions or any sections they didn't get or wrote down, took some notes on, anything before we get started? All right, well, let's go ahead and get started with trend identification. Training video number 1. Can you guys see my Tradera screen?
Yes.
Yes.
Okay, so before we dive into this, let's just review what we learned yesterday. Yesterday, we learned about support and resistance. Who can tell me basically what support and resistance is?
It's like the ceiling and the floor. Support is the floor and resistance is the ceiling.
Yes. Can anyone bring any more clarity to that?
Supply and demand.
Yes, supply and demand. What do we do when we are at support?
You buy,
And what do we do when we're at resistance?
we sell,
Sell.
trade.
Okay, so what we're going to learn today, you guys, is about trend identification and how to draw a trend line. The trend line is the same thing as support and resistance. It's just with support and resistance is horizontal, okay? And a trend line is slanted. That's all it is. Because remember, as price moves, if it's going up, it looks like this, right? This is a trend line. This right here will be considered support every time this touches this line. So all it is diagonal support and resistance. Okay, write that in your notes.
Trend line is diagonal support and okay, I wrote that already.
Yes, a trend line is diagonal support and resistance. Okay, now let's go ahead and go over some of the significant areas in trend identification video number 1.
Maybe she should open her screen.
Can you guys see my screen?
Oh, she did it. Okay.
Yes.
So I
Yes.
tell her that.
Yes.
Okay,
Yes.
all right.
Exactly a trend line is. Now here we've got a table in front of us, and on the left we have traditional support and resistance, and on the right we have trend line. So our goal by the end of this is to answer the question, what's the trend line? And we're going to start over here on the left-hand side by drawing a traditional horizontal support and resistance level. So this level right here is a horizontal support and resistance level. Now, how does price react to the support and resistance level? Well, let's say that we are under the level, price is under the level, then that level will hold as resistance. So here the level is holding as resistance, pushing price down. And then when price does breach through the level, that level will then turn to support. Price will come back to retest. It will hold a support and price will continue on. So that is typically how traditional horizontal support and resistance works. Now how a trend line works. So let's draw a trend line now. So a trend line may look like this. And the way price will work on a trend line, will go up, it will come down and bounce off the trend line, go up, come down and bounce on the trend line, go up, come down and bounce on the trend line. And then finally, the trend line will break. And when the trend line breaks, price will come back up to the trend line, retest it, and then continue on in the other direction. So if you think about what just happened, they're essentially the exact same thing. Horizontal support and resistance and trend lines function in the exact same way. It's just that trend lines are diagonal. They are angled. They are not perfectly horizontal. As you can see, they act as support when price is above them, and then they act as resistance once they are broken. Same way that our horizontal level acts with price, act as resistance and then become support. And of course, this works in both ways. So now when price is going down, you have a descending trend line. When price reaches this retest, it will hold a support and price will continue on, just as it did here with the horizontal level. So the way that I want you all to understand what trend lines actually are, the answer, if anyone asks you what a trend line is, a trend line is simply diagonal support and resistance. That's it. That's all a trend line is. So this is our answer to the question, what is a trend line? So now that we know the core basics as to what a trend line is and kind of how it works, we need to understand conceptually why they form so that we have confidence when we use them and put real money on the line. All right, so now our question is, why do trend lines form? Why should we rely on them for our analysis? So what we're going to do is we're going to just draw an uptrend here for this example. So here is our uptrend. All right, and then we're going to draw our trend line for this uptrend. All right, so let's connect these here. Okay. So to understand why trend lines form, we need to understand a little bit about market psychology, supply and demand, and market participants. Right now, we can conclude that the market is bullish. So when we conclude that the market is bullish, what that means is that key market participants, people with enough equity to move the market and actually impact price, are long on this pair. Now, if you open up the market and you're looking to get in on this market and capitalize on the bullish move,
I think you're muted.
Okay, right now, thank you, hon. We are about to discuss what a bullish market looks like. What the market looks like when it's in a bullish trend. Remember, bullish means that price is going up, right? So you see how price started here and it's coming up. Did everyone understand why a trend line is just diagonal support and resistance? Can everyone understand or see why this right here, these three touches, is considered support?
Yes.
Yes.
Okay, so what you need to write in your notes is when you're identifying what trend the market is in, if the market is bullish, your trend line is going to go on the bottom. If you're drawing a trend line for a bullish trend, It's going to be on the bottom. And let me explain to you why. This trend line is acting as support, right? So remember, we use these support and resistance levels to know when a change is coming, when price has decided to go the opposite way. So with this being a bullish trend and price going up, if we drew this trend line on top of it, we would never know when price went down, right?
Right.
Yes.
And that's the whole purpose of the trend line. We want to know when price decides to go
Go
down.
that one way and just give me another one. Squeeze another.
We want to know when price decides to go down. So when it breaks this trend line. So if price is going up, the only way we'll know when it's going down is to put the trend line underneath price on the bottom. From what we learned yesterday, what would we do if we had a break, if price came down, broke, and retested here? What would we do?
Get in on a trade
Sell.
for a sell.
Yes, that's exactly what we would do. So this is the same thing as support and resistance. It's just diagonal. Did that bring a lot of clarity to someone?
Yes, ma'am.
Yeah,
Yeah.
absolutely.
Yeah, because if you don't have that line on the bottom, you wouldn't know if it not only come down, you wouldn't know if it pushes through.
Right. So that's why it's very important for you to know on which side you draw the trend line. Because what good would this trend line be to you if it were on top? Because you would just, every time price go up, you would just be moving the trend line to follow the uptrend. When price decided to go down, what are you going to use for your indication that price is going down?
That support line.
Well, that's if you draw it in the right place. I'm saying
Right.
if you drew it in the wrong place,
Well, you won't know.
Exactly. Okay. So when you're in a bullish trend and you're drawing a bullish trend line, it's going to go at the bottom. Okay. Let's see.
Have so much money on the line that buying at a discount means saving billions of dollars on just a single transaction. So when we talk about the financial markets and we're looking at cases of supply and demand, it's important to understand that these big players, these people that are actually controlling and moving the market, they have no choice but to get a low price. There's simply too much money on the line. 20% of $100 is only $20. 20% of $100 billion is $20 billion is at 81.0.
Okay, let me get you guys.
And then let's say that some big institution has a total of $50 billion that they need to get rid of. So let's go ahead and write down $50 billion that they need to get rid of. So let's make this a little smaller here. All right, so they need to get rid of $50 billion. So what they're gonna do is, let's say they get rid of 10 billion of it right here. So roughly 10 billion they get rid of right here. Now when this happens, so when they place this order right here, it's going to push price up. And now when price is all the way up here, they're not going to place another order. What they need to see is they need to see price pull back so that they can place another order for, let's say, another $10 billion. So they want to get rid of another $10 billion, but they need a discount to do so. So what they'll do, and they know that they've got to do this. So let's clone, and then, so 1, 2, 3, And then let's move this up here as well. And then here's our final order. So they know that they need to do this a total of 4 more times to fill the entire $50 billion worth of order. So what they'll do is they say, okay, I'm going to come in at a 60% discount rate. And they're only going to fill their orders at the 60% discount rate. So I want you to imagine that over here on the right-hand side, when we looked at this bullish market, what you're actually seeing is 60% discount rate buy order.
Everyone taking notes, I want you to take note of what I'm about to tell you right now, okay? So all the notes you're writing down now should be for a bullish trend. So when the market is in a bullish trend, it's making higher highs and higher lows. Everybody write that down. When the market is in a bullish trend, it's making a higher high. What I mean by that is, you see my cursor? Let's say this where price was at first, and then price rose. This is a higher high, right? Then, as he's explaining over here, when price is driven up, it has to come back down in order to continue to go up higher. Because look at this. You see where price is right here? It's like at 81 and a half, almost at 82. But you see this peak here? It's at 84. So it's making higher highs. Every time price drives up, it's a higher high. In order for it to continue to go up, it's making a higher low. This right here would have been a low. This is a higher low than this one. This is a higher low than this one. This is a higher low than the previous one. That's one way that you can determine what type of trend the market's in. If you see it making higher highs and higher lows, it's in a bullish trend. Does everyone understand that?
Yes.
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 Okay. All right, so let's move on to a bullish market. Let's show you what a bullish market looks like. It's going to be okay. Now, a bearish market. Taking notes, write this down. When you're drawing a trend line for a bearish market, the trend line is going to be above price. It's going to be on the top. Why is it going to be on the top, you guys?
Because when it breaks, then you will know that the market is now changing back to bullish.
Exactly. This is a downtrend. Price is going down. Does everyone see how this is considered a level of resistance?
Yes.
You see how every time price goes here, it's rejected. Every time price goes there, it's rejected. So every time price comes to here, what are we going to do?
You have to sell right there.
You're going to sell it. Okay. And can someone, all right, so we know that on a bearish market, the trend line got to be on the top. Reason being, because price is going down, we want to be able to know when price goes bullish. The only way we can know is if price goes up and breaks this trend line. Okay, then we know that the market has turned around and it's now bullish. So any sales that you're in, at that point, you would know to get out. Well, I'm going to teach you some things where you'll know before this happens, but that's one way to tell when the market has reversed. And whenever the market is in a bearish trend, it's making lower lows and lower highs. Okay, remember, market's going up when it's bullish, so everything that it's make is going to be high. The highs are going to be high, the lows are going to be high. High is going to go in front of everything for bullish market. On a bearish market, it's going to make lower lows. You see how price started here and price going down, right? So when it came down and it got ready to, it's got to go back up. So this peak is considered a lower low compared to where price was here. You see how low it came down? So now price has to go back up. When it goes back up, this is considered a lower high, because remember we started here. Well, look at the numbers here. Price is going down. So this is a lower high. When it comes to this peak, it makes a lower low than it did here. When it goes back up to the resistance, it's making a lower high than it did here. So does everyone understand that a bullish market makes higher highs and higher lows, and a bearish market makes lower lows and lower highs?
Yes.
Yes.
And everyone understands where the trend line goes.
Yes.
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 All right. Now, it's very important that you know that same thing like with support. Remember, with support, we needed more than one touch. Well, with these trend lines, we need at least two. You want 2 to 3 touches. So with that being said, let's look at this bearish market here. Let's say we open up a chart and price was just right here at this lower low, right? So, well, actually, that wouldn't work. Let's say price was here, right here in this first dip. Would I be able to start drawing any type of trend line?
No,
Why?
because you haven't reached at least 2 to 3 touches.
Right, I wouldn't have a touch. All I have is one here. I wouldn't have a touch. And what a touch means is that you can draw this line from the wick of one candle to another, and it's going to touch it. Okay? So you have to have 2 to 3 touches on a trend line. You see here we got 1, 2, 3, 4. Here we got 3. Now, same thing, just like with the support and resistance. What you guys think is going to happen if this resistance line, which is a trend line, keeps getting hit?
It's going to break through.
It's eventually going to break through. So you look at those the same way you do with support and resistance. Okay, now how you would know that the market turned around, it would have to go up here, it would have to break this trend line, retest it. Well, once it breaks, you know then that it's gone bullish. You're waiting on a retest to take the trade. That makes sense to everybody?
Yes, ma'am.
Yes, yes.
All right. So let's look at, okay, here, you see how this got the 3 touches here? Now, let's watch him actually draw some trend lines.
And we're going to just start with this area right here. So the first thing that we're going to note.
So don't let this trip you up. You know, if you go to a chart right now, it's not going to look like this unless you scroll back. You're going to see where price is currently. This is what I was explaining to you guys before we got started. He's just coming to a section of a chart just to show you examples. So don't let that throw you off as to where you get started on a chart. Is everyone clear on that?
Yes.
Yes.
All right.
is that we've got a peak in the market right here. Okay, so let's go ahead and call this out. This is a peak in the market. All right, now we fall down here and we come back up, and then here we fall again and we see, okay, we've got another peak in the market right here. So here's our next peak. And similar to support and resistance, how you need at least 2 identifiers to actually mark your horizontal level. When it comes to trend lines, you also need at least 2 identifiers to mark your trend line. So if you notice over here, we are in a bearish market. How do you know we're in a bearish market? Well, real simple. If you look on the left, we start up here. If you look over on the right, we end up down here. You go from here to here, that's down. That's a bearish market. No need to overcomplicate it, okay? We're in a bearish market. In a bearish market, we're interested in trend lines on top of price. So here we are, and we're going to connect these 2 peaks.
Everyone see how he got his trend line tool from over here. All your tools on TradingView. Did everyone download TradingView last night?
Yes.
Yes.
Okay, so your tools are located over here, and all he's using is the trend line. Okay, there is a video in the back office explaining to you how to use trend lines. I highly recommend that you guys use Google to find something really quick that'll show you all the tools that you'll need. Just Google, you know, how to use TradingView on whatever device it is that you're trying to use it on, and it'll show you where these tools are. But as we're going through this, when I see we're using different tools, I do mention to you where they are located. Okay, so that's what he's using. He's using the trend line tool
to get our trend line. Okay, now let's talk about this connection, because this is really important. So everyone's got different ways for drawing their trend lines, and 95% of people who are teaching it are wrong. So if you want to really make money, listen up. This is important. This is very important. When you draw your trend lines, you need to know the outermost boundary of your diagonal support and resistance.
This section here is very, very important, okay? I need everybody to pay attention. We're getting ready to discuss the outermost boundary of a trend line.
The outermost boundary. So first of all, over here on the left, right here, this needs to connect to the uppermost peak, right here, the wick, top of the wick, okay? And then right here, I need this to connect to the top of this wick right here. So I have the outermost peak, all right? So I'm going to adjust it to that. This is incredibly important, and there will be minor exceptions to this rule, and we'll look at more examples in other videos when that happens. But in general, this is how you properly draw your trend line. When you draw your trend lines in this manner, you know for sure that when price breaks this, it's broken the outermost boundary, the outermost support or resistance level, and you can for sure rely on the fact that you are looking at a potential trend change. So now, notice how when we connect these peaks, what happens when price gets back up? We fall again. And then price comes back up right here, we fall again. And then remember how when we discussed support and resistance horizontally, we discussed how we'd like to see that it takes strong momentum to break through the level. It lets us know that that level is indeed strong and something that we can rely on from a fundamental standpoint. Here we have a strong candle breach right here, and then look what happens. Real simple, price strong breach, retest, held as support now, and then off we go. All right, real simple. So very similar to horizontal support and resistance. It's just that we're now turned diagonal. So here is our reaction point right here. We can get rid of this arrow. All right.
Okay, so what I need everyone to understand, because we're getting ready to, I want you to understand what we mean by the outermost boundary, okay? So this example here, he just came to a section of this chart, and let's just say we came here and price was, let's say price was currently right here. You see where this turquoise dotted line is in the middle of my screen?
Uh-huh.
So we're going to say that this is where price is currently, right? So that means that none of this over here on the right-hand side of my screen has happened yet, okay? So you see that price is falling, and so we know we're in a downtrend, but we want to know when is this downtrend going to be broken. So we're going to draw it from the top of this peak here. We can draw it because remember, price is currently here, right? We can draw this trend line because we have two touches. So when we can go ahead and draw it out. So we go ahead and draw it. When you draw it, you never just stop right here. You're going to go ahead and extend it out, right? So as you can see, we had two touches. We extended it out. And look at how price respected it. You see how, remember, when we got to these charts, we were right here where this little red doji candle is. Look at how price went up and respected this trend line here. You guys see that?
Yes.
So the reason I'm bringing this to your attention is because what the outermost boundary means is that whenever a wick comes through your trend line, you have to adjust it. Now, he drew it like this just to show you that this is how you draw a trend line, because you had two touches here and you just drew it, right? So if we were going to include our outermost boundary after this play right here happens, we would move this trend line to catch this wick right here. Does that make sense to everyone?
Ooh, I was just about to ask about that too.
Yes. What do you mean that you will move it?
You would go to your trading view and you would touch it to make it where you can move it, and we're gonna move it up to include this wick right here.
Right.
And the
Only
reason
after it breaks through?
Yes. That's what it means to include your outermost boundaries. With this trend line going down through here and price shooting up like this, we're not including that. At one point during this candle, let's see, he's on the daily. You see up here in the top left-hand corner, 1D, that stands for daily. So each one of these candles, no matter how big or small, it took a whole 24-hour day for it to complete. Okay, so you would have had your trend line drew, but once this happened, you would have had to move it to include that outermost boundary. And the reason how you would know to move it is because it went through it, the candle didn't go through it. If the candle went through it, like over here, it would be considered a break, but it didn't. Price went up that high, but it couldn't sustain, it came back down. That's what makes these wicks. So when you see a wick, all that means is that that's the highest level that price went to while that candle was being created. So during the 24 hours, this candle actually price came all the way up to here. But during the 24 hours, it couldn't stay there. It couldn't hold. The bears was coming in, putting more orders in, and pushed price all the way back down to here. And by the end of the day, that's where the price was at.
I have a question, please.
Yes.
So if when the wick formed and price couldn't sustain and it had to come back down, then what's the purpose of moving the trend line to include the wick if
Because remember yesterday we
The
learned
outermost
that
boundaries.
what happens inside of these charts, history does what? What does history like to
repeat
do?
itself?
Repeat
Repeats
itself.
itself. Yes.
So it means that if price went here before,
It's gonna
it
do
can
it
go
again.
there again, even though
Got
it
it.
didn't sustain. So
Okay.
that's why you want to include it in your trend line.
Okay.
Does that make sense?
Yes, ma'am.
Andrea?
Thanks.
Yes.
Okay, I'm understanding the right side, but I'm not sure why we didn't include the movements that took place on the left side. Like where that turquoise line is again up on the left.
Uh-huh.
We have started way up there and then went down.
Yes, you're saying when you're drawing the trend line?
Yes.
Yes, you could. You absolutely could. You could draw this trend line starting from way up here and bring it down. He just chose this section to show you.
Okay. So is there something that we'll know, or I'll know anyhow, where to start on the left?
Yeah, because I mean, just think, like we're looking at a daily chart, right? So 7 of these candles equal a week. There's no need to go way back here. If we open this up, we would only be looking at where price is currently, which would be over here at the end of this chart. And if I had to draw a trend line, we see that it's in a bearish trend here. I would draw this one. Okay, even though that was that right there, that's probably 2 or 3 weeks worth of price action right here. So you don't have to go like way back. He just chose this section to show you what a trend line is. Don't let it confuse you. You got to keep in mind that when you're watching these videos, he's just showing you examples. He's not showing you like what to do as far as current. He's just going to a section of a chart showing you what a trend line looks like.
Huh?
Okay.
Why did you put it in without the daggone pan underneath it?
So that's why he didn't start up there.
Fix it.
So the trend line can be considered to, like you can create a trend line for an hour or 2 hours, 4 hours, and then kind of see the same data, so to speak.
Yeah, it will look different. It'll look different on every chart, and this is why. On the daily, remember, it takes each one of these candles 1 day to create itself. So on the 1 hour, each one of those candles take 1 hour to form, which means it takes 24 of those to make one of these. So do you see how it is going to look different? Now you can draw it on the daily, and when you drop down in time frames, you'll be able to see it. But all that'll make more sense to you when we go over time frames. But right now, does everyone understand why we drew this trend line here? We're just showing you an example of how to draw a trend line. After this move here happened, do you understand that you would have adjusted your trend line to make sure you include the outermost boundary?
Yes.
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 All right.
Hey, well, Andrea, a question.
Yeah.
Now, when we moved, okay, so now it broke through and we're going to include that wick. Isn't that going to take that trend line off of that center one? Because since that one is up higher, that wick is higher? Like when you move
Yes,
it?
but as long as we got 2 touches, as long as we're able to still touch here and touch here, it's valid.
Okay.
Oh, so
You
the
need
2
at least
touches
2
don't have to be back to back then.
No, it just need
okay.
2. No, you just need 2 touches. And if you look, at this point, this is only your 3rd peak. So yeah, it might pull away from this one, but as long as it's connected to this one, you know, or you might, or, you know, this right here was so far back, like you could just use, it depends on you. He's just showing you an example. Someone might come here and draw the trend line from here to here.
Right.
Draw it this way, you know?
Okay. And you still would be right.
Yes.
Okay.
You still would be right.
Okay.
Okay.
So
Okay.
we just concerned, we more concerned about getting the formula down right now.
Right. Making sure that you understand what a trend line is, how to draw one, that it needs 2 to 3 touches, and how you will go back and adjust it to include your outermost boundary. Okay, because if you look here, you can see how Price respected this trend line, even though he got it drawn here. And when it broke, it broke here and then it went up. Well, let's just say if he adjusted, let me see if he actually covers this in the end part of this video. Let's watch.
So let's be comprehensive here and mark these. The slower these videos are, the better, because it just ensures that there's no questions left. Breach, and retest. All right.
Okay, so you see how it broke and it retested and then it went up? Well, even if we adjusted this trend line, right, then the trend line would be coming from this. It would include this outermost boundary, which means that it would be coming this way. And look at how much more accurate that is. That's actually showing you that once it crossed over, that's when it went up. Do you guys see that?
Yes.
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 Okay. So does everyone understand what a trend line is, how to draw one, what's required to even draw one, and what an outermost boundary is?
Yes, ma'am.
Yeah.
Yes.
All right. So that's going to make our next video even easier, which is going to be video number 2.
I have a question. And what is the like significance of the green and the red bar of the candles?
Okay, so the color of the candles.
Yes.
So a green candle is a bullish candle, and a red candle is a bearish candle.
Okay. Sorry, I missed yesterday's training.
Okay, we're going to make sure, I just realized that I didn't upload it yesterday, and I apologize for that, but we will get it uploaded into the group tonight. And you're considered class 2. So you're going to be looking for class 2 videos. Okay, so day 2 and day 3 for class 2 will be uploaded immediately after the class.
Okay.
2 will go up shortly after. 3, we're going to have to wait for it to download and everything. Okay, so it'll be up before later on tonight. All right, so trend identification. So what we're doing, video number 2. All right, let's start here.
Okay, yeah. So we've got the outer boundaries here, which is good. So let's zoom back out. All right, so a little further, discussed them before, but we discussed
Now this here is actually our same chart that we just got done looking at. Now you guys watch this and pay attention, okay?
recall we discussed, and I've already got these areas circled here because we've discussed them before, but we discussed how important it is to use the outermost boundary when you are connecting peaks or connecting valleys to draw your trend line. So in this example, the outermost peak was this wick right here and this wick right here, which we can bring it actually a little further out like that, okay? And then I'm going to drag this through here, right in this area. Now, in the previous video, when we had talked about this example, we didn't talk about what to do in this case once we had a wick come through the trend line. So based on what I've told you all, you needed to adjust your trend line to fit that new wick, like so. And let's just move this arrow slightly out of the way and make sure. Okay, yeah. So we've got the outer boundaries here, which is good. So let's zoom back out.
So you guys see how that's still a valid trend line because we got touch here and we got a touch here?
Yes.
Yes.
All right, so we're going to get further into this topic in a later video. We're going to talk about fanning and how these multiple possible trend lines actually work together to give you a clear understanding of the trend and what you need to be looking to do. But as just a general idea, I wanted to explain this specific example so that you understand how to adjust trend lines to market conditions and keep everything accurate. So in this case, for simplicity's sake, I'm going to delete the original trend line. So once you see that this has happened over here and that price has busted through the original trend line, you then, so keep in mind our trend line was here. Once you see this and price falls back down, you adjust the trend line to here, and that is now your trend line. So then over here, when we had price, and price busted through with a strong candlestick, came.
Now, you guys keep in mind that, did you hear what he said? When this happened, you move it after price falls back down. And the reason, after you see that this happens, you wouldn't be able to adjust it to this until this candle was done creating itself anyway, right? And so then you would do the adjustment because this right here is going to be a peak. So once it hit it, its price is going to go back down. Unless this was going to be the break in the retest, which it's not.
Back to retest, that resistance has turned to support, and then price continues on. Likewise, look over here. If we extend it even more, look at that. So price comes back over here. That resistance is.
You see how it supported it? You see how it price came back down to it, touched it, and then bounced off of it and went up?
Right.
So,
Yeah.
so is everyone clear on what a trend line is, how to draw it, how to include your outermost boundaries,
Yes.
how to draw a trend line on a bearish market and a bullish market?
Yes.
Yes.
If no one has any questions about trend lines, we are going to move on to market structure. Okay, let me, I'm going to stop the screen. Can you guys see my screen?
Yes.
No.
Well,
Yes.
not, you know.
No, no,
No.
Okay. All right, just one second.
it's just your info screen.
Okay. Hold on. I got something open that keeps thinking on here. Not sure what. Okay. All right, so now we're going to move on to market structure. Now, market structure is the meat and potatoes, you guys, of trading. This is the section that you want to make sure you thoroughly understand if you don't get nothing else out of this class, okay? This, knowing market structure, is going to save you so much money. It's going to make you so much money in these markets, okay? So market structure basically lets you know who is in control, okay? So this very first video, okay, so I'm just going to explain a couple of sections through here. Okay, so let's go here. Let's see, 3.
You guys know you don't have to take my.
All right. So as you can see here, he was just drawing price going up, right? Remember, we said when we're in a bullish trend, what are we making?
Higher highs and higher lows.
Yeah, higher
Buys.
lows.
Buys.
Higher highs and
And
higher
higher
lows.
lows.
Higher highs and higher lows. Now, we're able to tell every time when you're in a bullish trend, when price come, remember in a bullish trend, price is going up. Those lower lows and the higher highs is your indication to know, it'll let you know when the market has changed. So you see we got a lower low here, right? Got a higher high, lower low, higher high, lower low, higher high.
Wait, do you mean higher
I mean,
low?
higher low.
Yes,
Higher
high,
high,
Would
higher
it
low?
not be higher low?
higher high.
Higher
What did
low.
I say? Higher high, higher low, higher
Right.
high, higher low, higher high, higher low, higher high. And then our higher low would have to be above this, right? If price was going to keep going up. But it didn't. It surpassed it and came down. So this allows us to know that now we're in a bullish trend because this is considered structure. Okay. Now let me show you how you would draw structure out before we get into the video. So let's say we open up this chart and price was here at the very beginning, right? Well, we have no clue where market structure is just according to what we're looking at. So once we make the higher high and then we get the higher low, even when we get the higher low, we still don't know where the market structure is. We can only determine where this market structure is once the next higher high is created. So once this next higher high is created, we know this is our market structure. So as we draw a line here, as long as price never comes back past here, we're bullish. So now we got a higher high, right? And we got a higher low. We create a new higher high. So what does that mean? We got new structure. We can move this structure up. As long as it never gets broken, we're bullish. Price goes up, comes down, makes a higher low. Once it goes up to the higher high, we now have new structure. Now, it created this higher high, and then what happened?
Broke through.
It broke through it. So when it broke through here, it let us know that we are no longer in an uptrend. We are at this point considered bearish. Does that make sense to everyone?
Yes.
What you said about market structure?
I'm sorry.
Can you repeat basically what you just said about market structure? Because my notes are not making sense. I was trying to like write down verbatim what you said, and it's not flowing. So like, if you can you sum up what you just said?
So when you're creating higher highs and higher lows, you're in a bullish trend. Your you will determine where the structure is once your next higher high is created. Because let's just say we're here, right? So we know that we got a higher high from here, and we know we got a higher low, but we need to make sure that we're going to create another higher high before we can determine what this structure is, where structure is. And the reason why is because let's just say that price came down to here, right? And then it only went to here and then came down.
Then that would be a bearish
Then
market.
it'd be bearish.
It would be bearish, but you're able to mark these structure lines. Let's back this up. Hold on. Let me let you guys watch this.
We're traveling up, obviously, right? We're bullish. We pull back, we travel up, we pull back, travel up, and we keep making higher highs and higher lows. That is what a bullish trend looks like, okay? Now, there's several key, I'm gonna zoom into this. There are several key characteristics to this, all right? The first one that you need to note is that we are making higher lows. Okay, so there are higher lows being created, there are higher valleys, there are higher divots, however you want to look at that. There are higher lows being created at any given time. Now, there are also higher highs being created at any given time if the market is in a bullish trend. Okay, so guys, the second that you see that the market is no longer making higher highs or higher lows, you are no longer in a bullish trend. So what's that going to look like? The market breaches this, holds, and you will no longer be in a bullish trend. That is extremely important, guys. Extremely important. So this is what a bullish trend looks like. Higher highs, higher lows. And I'm going to do this very tedious step because I want you all to understand this when we go into the charts and actually look practically and see what this really looks like, okay? And that's what we're gonna do, guys. I'm going to make all of these statements. I'm going to write this out for you, and then we're going to go in the markets and I'm going to prove to you guys that this is how the market moves and this is how you can trade the market. That way you guys know you don't have to take my word for it. You can leave this with full confidence and understanding that this is real. Okay, so guys, that is a bullish trend. Now,
okay, so if you guys went to a chart and you seen like a bullish trend, you would be able to look at it as it's going up. Let's say you came to the markets and you see that it is in an uptrend. You know where the market structure breaks are, so you would just follow them up and until you get to your recent one, and you would use it to determine if the market is still bullish or bearish. Does that make sense?
Mm-hmm.
Yes.
Everyone understand? Do you understand how this right here was structured, and once it broke, we're no longer bullish?
Yes.
Yes. Yes.
Yes.
Okay.
and we are making lower lows. Very simple. So there are there are lower peaks coming down, there are lower lows coming down, and this is the definition, the basic professional definitions you will be taught if you go to apply to work at a hedge fund or any kind of financial institution at all. This is like basic 101, understanding how the market moves. Higher lows, higher highs, you're in an uptrend. Lower highs, lower lows, you are in a downtrend. That simple. Okay, now the third market condition that we can have is consolidation. Consolidation. Okay, what is consolidation? Consolidation pretty much means that we're not getting anywhere.
Okay, so over here, does everyone understand that the peak levels is what helps you determine where the structure is? Okay, so here in this bearish trend, we're coming down, right? So we're making lower highs and lower lows, right? We want to know when price breaches structure and goes higher. So on the bullish trend, we're putting it on the lows. right? So where do you think we will be putting structure in a bearish trend?
On the high.
Higher high.
On the lower highs. On the lower highs. And the reason why, let's say that structure was here, okay, on this first lower high. And let's say that this price came down, came here, came down, and then shot back up. We know we're in a bearish trend, but as soon as we made this point here, this is where our structure it's going to move. If you're in a bearish trend, the market structure is going to keep going down. And then soon as this would have shot back up, that you crossed it and you broke your market structure, and it lets you know that you're bearish. Okay.
So when it changes, that's where your structure is. That's where you put your line in reference to the structure.
Yes, so
bullish,
it would keep
bearish.
moving. Yes. So if you're in a bearish trend, as you creating these these lower highs, that's where your structure is gonna move to. Because basically
I apologize. The notification sound is blocking out. I can't understand some of your words.
I'm sorry. Hold on.
Could you hear that, Andrea?
I'm sorry.
Could you hear that notification, or was just us can hear it?
I thought I had turned it off. Let me see. I don't even know. Everything's closed.
It's possible that it's also probably coming from the chat.
That has to be where it's coming from, because I don't have anything else open. That's exactly where it's coming from. It's coming from the chat, you guys. Yeah, because every time we do it, it lights up here orange. Okay, so
You can fix that in your settings when you do your Zoom call. When people enter and exit, you can just turn that feature off.
Okay.
Just for future reference.
Oh no, it's not for entering and exit. This is people writing in the chat. Like every time like a message is typed.
Okay.
I'll have to check out how to disable that and cut the notifications off. Okay, so does everyone understand how this right here can save you? Because let's say you come to the markets and you see that it's in a bearish trend, right? And price, it looks like it's in a bearish trend, but prices came up here a little bit. It's came like above here. So at this point, because of what we learned this far, we would know that market structure is broken. But I'm just showing you this to give you an example of how this would keep you from getting into a sale in a market that has reversed. So does everyone understand the importance of knowing the market structure?
Yes, it's not only the chat, because no one's chatting right now and it's still going off somewhere. Sorry.
Okay.
It's your Telegram notification.
No, I don't have Telegram open.
We can just keep going, can't we?
I mean, I want to make sure that everyone can hear. Is everyone able to hear me okay?
Yes.
Yeah, I
I,
can.
I have everything off. I'm not sure what it is.
Yeah. Yep.
Ding, that sound. That's all.
Okay. I'm gonna be looking to see what's lighting up because I'm not sure where it's coming from. I got everything else closed. Okay, so in these markets, it's 3 different types of conditions, okay? We're either gonna be in a bullish trend, a bearish trend, or consolidation. Consolidation is a sideways market. It's where, let me show you.
Exactly, right? Guys, why is it that
Here, consolidation, meaning that price is not making any higher highs, higher lows. It's not making any lower lows or lower highs. You see how it's just basically going in, it's going sideways. It's not going up, it's not going down. Whenever the market is like this is a no trade zone. Whenever you trade in a consolidated market, you're going to get what they call whipsawed. Whipsawed is like being in a car wreck, you know, how you get whiplash, how you just going back and forth, back and forth. That's what whipsawed is. You're just going to be going back and forth in between these lines. You're going to make some, you're going to lose it all. If you got in, let's say you got in for a buy. Let's say you got in for a buy right here. You got in for a buy. You're going to make some money. You're going to lose it all. You're going to make it back. You're going to lose it all. You're going to make it back. You're going to lose it all. You're just going to keep getting whipsawed. Any questions about a consolidating market?
No.
So do you buy or sell in the consolidated market?
Don't trade during a consolidated market at all.
Oh, don't trade. Okay, got it.
Yeah, because it's not, you want to trade when the market is volatile. The only way it can be volatile, it has to be making higher highs and higher lows, or lower lows and lower highs. Here it's not. They're equivalent. It's making a high. This high is not higher or lower. This low here is not lower than this one, or this one is not lower than that. It's just equivalent. It's just going sideways.
To me, this looks like what we saw yesterday with the horizontal support and resistance. Is this different than that?
Okay, so yeah, this right here is not considered, well, yeah, I guess you could look at this as support and resistance lines, but normally on your chart, like your lines will probably be further away, and you could just have price just moving sideways in between them. These lines are just drawn here to show you that it's not going any higher and it's not going any lower. Not really support and resistance.
And then also, he was just kind of showing us what support and resistance is, opposed to trying to show us a consolidation, right? Just trying to get our minds geared to show us what support and resistance is.
No, the whole purpose of this is to show you what consolidation looks like. This here really has nothing to do with support and resistance. This here is a consolidating market. These lines are drawn here. This happens to be support and resistance because this is where the peaks are for this example.
Yeah, I get it. I was just talking about the first video that we watched. I was just saying that he was just trying to get us to see the difference in support and resistance, I guess.
Oh, yes. You're talking about with the trend lines?
Yes, ma'am. Yesterday, the support and resistance, the first film.
Oh, okay, yes. So yesterday was all about support and resistance.
Right, okay, yeah.
But in consolidation, you don't know what the market's going to do, right?
Right. That's why you don't want to trade, because the market could break, it could break out and go up. It could break this, retest and go up. It could come down here, break out and go down. You don't know. This is a no trade zone. You want to wait until the breakout. Most of the time when some people see consolidation, they'll use their rectangle tool and just highlight the consolidated area and kind of trap it in a box. Because that's basically what we're teaching you to do, is trap price. You're going to be a trap price. That's what you're going to be doing, trapping price. Okay? And so they'll just draw a box around the consolidated area and just wait for the breakout. Wait to see if it's going to break up to the upside or break to the downside.
Okay.
Okay, so does that let everybody or make you understand why you wouldn't trade? Because you don't know what it's going to do.
Yes.
Because it's making right now, what's happening is the bulls and the bears are fighting against each other. As many buy orders they putting in, that as the bears coming in putting in just as many sell orders, and they just fighting back and forth. It's the price going back and forth, back and forth. Somebody has to overpower the other one in order for this to break out. Make sense?
Yes.
Yes.
All right. So let's go to this section.
Look at
here.
It's real, it works, and this is how the market moves, okay? So literally, I've just got EU pulled up on the 4 hour. It doesn't matter. You guys can tell me to pull up any pair. I will go on the 1 minute time frame on the most BS pair you can ever think of, and I'll show you that this stuff works. It literally does not matter. It works consistently. Okay, check this out, guys. Is the market going down or up?
Hi, Miss Cleo.
Down, right? Obviously. So let's see if we can follow structure down. Let me lower low created, lower high created, lower low created, lower high created, lower low created, lower high created, lower low created, lower high created. Look at this, guys. Look at this. Why in the world, and I know because I saw so many people doing it, guys. This was not long ago. So many people were trying to buy EU off in these zones, and there was no reason to buy EU. There was no reason to buy EU unless you just want to feed the institutional pockets.
With what he just said, does everyone understand that this right here is very important? Because it will let you know what type of trades you need to be placing in the market. He's looking at EU right now, and he's saying a lot of people were wanting to buy. Now, from what we just learned, we seeing that this is making lower highs and lower lows, okay? Every time a new lower low is made, it's not, price is not surpassing it. Here it is, lower low. So here's our structure. You see how even here, it stayed below it. Okay, so we came down, we made a new lower low. We got new structure, didn't get broke. We got a new one here, didn't get broke. Come down, we got a new one. You see that?
Yes.
Okay.
Because they were just adding positions. They were adding sell positions every time the market pulled back. Look at this, guys. Look. Consistently. Now, we get down here. Tell me what happens. Tell me what happens when this breaks. What happens? We retrace, make a higher low, and then what? Boom, higher high. So if you guys took...
Everybody see that? Do you see how knowing this market structure, if you did come to the charts and you see, oh, this thing is falling, let me get in for a sale. Do you see how just knowing what we've learned tonight would have kept you from getting into a sale?
Yes.
Yes.
Yes. Everyone see that? Is there anyone that don't understand that?
I guess I missed it. I thought you would get in a cell writing that down.
You would writing this down, but what happened over here?
Oh, okay. Yeah, I get you now. Yeah.
So you would get out right before the structure changes.
You would get out when you realize that structure has been broken.
Okay, I
Or
got you.
you'll lose money.
Yeah.
Okay.
Buy trades, guess what? You were eating. Here we go. Higher highs, higher lows created. Okay, so this condition, this market condition right here, and guys, it doesn't matter, bearish market conditions. Okay, it does not matter if you came into the market and you were right here. It doesn't matter if you came in and you were right here, or even at the very end. It really doesn't matter. Each time, no matter where you came into this market, it was bearish, flat out. Okay, so if you took buy trades in here, guess what? Most likely, you're gonna lose.
L.
All right, so
Yeah.
let me, whoops. All right, now, this area right in here, where as soon as you saw this break, guys, look at this. Saw this break, where's my little, there it is. Saw this swing right here break, you see this? See this swing right here? As soon as it broke, we saw a higher high created. We saw a higher low created. What did the market do? Did it make a higher high and a higher low and then fly down? No, right? It continued to go up. And that's the key, guys. That's
So does everyone understand how this structure followed down and it respected it? And here, this is where the market structure break took place.
Yes.
Mm-hmm.
Yes.
Yeah.
So at that point, we were bullish.
Boom.
Okay.
That's key. So here's a bullish market condition. I did not spell bullish correctly. There we go. Awesome. All right. So guys, here are two examples in front of you. We have a bearish market, we have a bullish market, and guess what's going to happen here? Guess what's going to happen here? We're going to break. We're going to make a lower low, okay, than we previously did. And we're going to retest, make a lower high, and guess what, guys? Game on. Here we go again. Here we go again, just flying down. Look how well this was respected, guys. So look how well it's respected. Structure was right here. Structure was right here at this time, okay? Price flew down, structure's still right here. Guess what? Came all the way back up to structure and then continued to go down. Lower high, lower low, lower high, lower low, lower high, lower low. Swung right here, breached it. It was game on from there. Up we go.
Yeah, everybody see where the break took place.
Yes. I got it.
Yeah.
Does anyone not understand what's going on right now?
You guys see how this works? See how this works? Now, let me see. Here we go. Here's a great example. So I've shown you two of the market conditions already. I've shown you a bullish condition. I've shown you a bearish condition. Now I'm going to show you the consolidation. So right here, we have a little bit of consolidation. Y'all see this? We're not necessarily making higher highs. We're not necessarily making.
That's what consolidation will look like in the real market live. Do you see this? You see how all the highs are equivalent, all the lows are equivalent. It's not making any peaks. It's not making any higher peaks or lower peaks. That's consolidation. Do you see how it broke out? And when it broke out, which way did it go?
It went up.
It broke out to the upside. Do you see how important it is to wait for the breakout? Because if you look at these candles here, I can't make the screen any bigger, but if you look at these candles here, they're like bearish candles here, you know, and I could see where someone would jump in for a sale. And guess what? They would have lost. because it broke out and went straight to the upside. So never trade the consolidated areas where it's going sideways. So does everyone understand what market structure is, how to draw it?
Yeah.
Yes.
Yes.
Yeah.
All right. Moving right along. Let's see what we got next. Okay, so that is, which video is this we just looked at? Okay, today we're supposed to be going over market structure 1, 2, and 3. Okay, so this video is very short. We're going to watch it so you guys can see. Hold on, let me get my screen share back. Can you guys see my screen?
Yes.
Yes.
In this video, I'm just going to walk you through marking up your swings with the line tool. And I'm just going to do a real short video and show y'all really how I do that. Okay, so let's change the color. We're not doing yellow today. Okay, so looking at this, right, this is UJ on the 1 hour. Okay, and we're going to go through and we're just going to mark our structure.
Y'all watching the movie together, ain't you?
Okay, so we're going to get our swing highs, our swing lows. Just so y'all get a good idea on how I'm really doing this. Now see all this in here, how I just kind of consolidated. What I did was I just clicked on this highest point here before it made this initial move down. You want to make sure you're getting the important structural points, okay? But at the same time, you don't want to get every single little whipsaw. What I mean by that is that you don't want to get too caught up in getting these little one candle moves. Okay, you do want to get your overall flow of the market, but you don't need to get every single little move. Now that one did make a lower low, so I'll give it to it. Okay, and we'll move forward some. All right, but if you know your structure, right? You know the flow of the market, you'll know what your structure is. Okay, and if you know what your structure is, you'll know when exactly the bears or the bulls have officially taken over. Now you can look at candlesticks, candlestick size, you can look at the strength in the buyers and in the sellers, and it's a good indication to who's in control. But the most important thing is the overall structure of the pair you're trading. Okay.
Okay, so the reason why I wanted you guys to watch this video together is so that you can see how he's drawing this to determine what the market structure is. So this is on TradingView, okay? The tool he's using is the trend line tool, the tool that we mentioned earlier. The only thing he's doing is, if you look right here to the far left, do you see this little pencil and this lock?
Yeah.
Yeah.
That's a continuous, that means continuation. So whatever you choose to do, if you put this lock on, it's just going to keep doing it. That's how he was able to keep drawing these lines without stopping, going back over here, keep grabbing the trend line. Keep grabbing the trend line. Draw it up, grab a trend line, draw down. He put this continuous move lock on, and you just press your, if you're on a computer, you hold your mouse down, you draw the line, you're going to click when you get to the top, and then you click and you draw it to the bottom. You click, you draw it to the top, like that. Okay, now what he's doing is he is getting the highest point and the lowest point. Whenever you come to a consolidated area, you're not going to draw a sideways line. You're going to draw to the highest peak of that consolidated area. You see how this right here is straight consolidation? Well, once he came down, he just went to the highest peak in that consolidation and then came down to the lowest point. Okay, so if you use that trend line tool to draw this, you will be able to see your market structure. You can use your rectangle tool here to draw your little bars showing market structure. Okay, so does everybody know what tools to use to be able to draw this out, draw your higher highs, higher lows, lower lows, lower highs and lower lows to determine the market structure?
Yes.
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 Okay. All right, so let's see. Our very last video, which is number 3. We're gonna look at a couple of sections here. Let me back it up so you can see where.
So what normally will happen, price breaks, okay? So our structure is here, right? So price, and then we have our previous high, which was here. So what normally will happen, you expect this to happen a lot of the time, is that price will bounce up and retrace anywhere in this area. Okay, it doesn't matter if it could be down here and come up, right? It can come down, oops, and come down here and come up.
Okay, now this is very important that everybody understand what's going on. Right now we're in a bullish trend, right? Does everyone agree?
Mm-hmm.
Okay,
Yes.
does everyone agree that right here, this is the line that he drew for structure? Because we came up, we made a higher high, we made a higher low. So this was our structure. So this here is our higher high. And that's why he got a line drawn here, because once price goes up, he's showing you that price can come down to this higher high level and go back up. You see how it actually did here? Price can actually come anywhere in between this higher high and this market structure. It can come halfway and go up. It can come all the way back down to market structure and go up. And we're not worried about that. Somebody tell me what's the only thing we worried about happening.
If it breaks through.
if it breaks through. If it breaks through. So when you draw the market structure, if you just use a line, this is just a regular horizontal line, which can be found on your trading view tools over to the left hand side. That's going to show you the in-between levels in which price can actually come to. And we're not worried about it as long as this doesn't break. Okay.
Okay, and you're still in your uptrend. Now, you know, as this goes on, since you've made a higher high, right? So now this is your structure. And
everybody see how and why this structure moved from here to here.
Yes, cause I got it.
Yes.
Because
of the higher low?
Because it made a higher high here.
Mm-hmm.
So when it made the higher high here, this is when structure moved. At first it was here. It was here because of this move, right? Then we came down, we made the peak. Once we got to the higher high, now we have a new structure.
Andrea, I got a question.
Okay.
All right. Now if we was doing a diagonal trend, the uptrend, the lines would go, this is where I get confused. The lines would go on the top or the bottom. I mean, like on the top of the peaks. I forgot that.
It's going to go on the bottom. That's what we learned last night in trend identification. We went over that in the beginning of class. The trend lines in a bullish trend is going to go on the bottom.
Okay.
And the reason why is because price is going up. We want to know when price starts to go down. If we draw it on top, price can go down. What's going to be our indication that price is going down if our trend line is up here?
You won't have nothing.
We won't have nothing. If we draw the trend line here, as soon as it breaks, it lets us know that, hey, you're in bullish territory.
Okay, I got it. I forgot. I saw it, but I just.
So, Andrea, in reference to the trend line, would we have the trend line and then also the straight line and then also the market structure?
You're going to be using all of this right now. Don't get overwhelmed. We're teaching you the different tools to use to be able to trade. And right now we're learning them individually, and we're going to put them all together next week.
Gotcha. Okay.
Okay.
And this is your previous high.
You see how he moved this line up because now we got a higher high. That's the previous high. Because remember, this market structure came from this high. We couldn't get this structure until this high was created. So now we got the structure, but we gotta mark the previous high. That's where this line is. It's gonna keep moving up. Both lines are gonna keep moving up.
Comes back into this zone and dips out. Okay, and then once it dips out and makes a higher high, we move it here. This is how price moves. Now sometimes it won't do this. Sometimes it'll leave you in the dust, and that's fine. So now we can expect for price to do several different things. It can come here and bounce right off. Okay. It can come down here and bounce up. And it can even come all the way down to here before bouncing up. Now, this is how this is going to work. This is the only way that this thing can continue to come up, continue to go up in bullish structure. Right? So if the only way I'm looking for a sell here is if price comes down, breaks this, right? Forms a new low, than the previous low, and then continues on down. But you're not bearish until this happens. Okay.
Does everybody understand how we just went bearish when it broke structure here?
Can you just put that back one more, a little bit, just because I missed it?
Okay, hold on.
So when it breaks the structure and it's going downtrend, where would the structure be?
I'm gonna pause it as he's going through and explaining.
That this thing can continue to come up.
So right now we're still bullish.
In bullish structure, right? So if the only way I'm looking for a sell here is if price comes down, breaks this, right? Forms a new low than the previous low.
The retest is what gives you the new low. You see how the break, it broke. We're in bullish territory because we broke. But when it gets the retest, this is what gives you the new low. Okay?
So bearish territory, right?
And then
right, bearish territory. Did I say the wrong thing?
Yeah.
I'm sorry. Bullish territory. Bearish territory. Okay, does everybody understand that though? How the break here, the retest gave you the new lower low because it's lower than your lows here. And now it's going down, so we are considered bearish.
Yes.
Now, to answer, I'm not sure who that was, but we're getting ready to answer your question right now.
It continues on down. But you're not bearish until this happens, okay? So let me just move somewhere else real quick. Okay, so if you're looking at this, right, let's say price does something like this. So we're going up, okay, boom. So right now, our structure is here at the recent low, right?
This is what I was trying to explain to you guys. You see how he couldn't get this structure until price came above this high right here?
Right.
It had to come past this level in order for him to determine that this was the structure.
I'm starting to see it now, Andrea.
Got it?
I'm starting to see it.
So when as you said that the only way to determine the market structure is when the second higher high is created.
Yes, so this here is the second higher. This is the next high.
Okay.
So here is the high, and we surpassed it as soon as price passed here. So that's what let us know that this is the structure. So with this being the structure, once this peak is created, this is going to be our recent high. This is where our single line would go.
Got it.
And our recent high is here. So price can come anywhere in this zone and continue on. Now, what happens if price comes down, right? Comes down to here and does this. Say it does this, right? And it's just, this is what it's doing.
Consolidate. Oops.
Okay, well, you're probably thinking, man, what's going on? Do I need to move my structure? What's going on? Right? Well, look, structure stays here. Structure stays here until this high is broken.
Did everybody catch that?
Mm-hmm.
We, at this point, even though it's consolidating, we are still considered bullish.
Oh, okay.
Because this structure has not been broken. It cannot break until we surpass this high.
So you can still be in the sell in that case, or, well, no, because now it's
No,
consolidated.
we would have never been in a sale. We would have been, it's
I mean,
making, you would have been in a buy. So let's
buy,
say
yeah.
you did get in the buy. Yes, you would stay in the buy. There's no reason to get out because we are still in bullish territory. We will not be in bearish territory until this is broken and a lower low is made after the break.
Right, okay.
Did everyone understand that?
So even if it's consolidating, Andrea, you still stay in the buy.
Yes, you don't want to get into a trade when it's consolidating, but if you already in the trade and something like this happens, as long as it doesn't break your structure, you're going to stay in it, because
Gotcha.
as long as it doesn't break, guess what? It's going to eventually go up.
Got it. Okay.
Or your stop loss
Okay,
will
so
catch
this
it.
whole time you're not.
Say that again.
Or your stop loss will catch it, correct?
Well, your stop loss, if you got your market structure here, your stop loss would be, it's going to be below it. If we're in a buy, the stop loss is going to be below this. So remember, as long as this doesn't get broken, we're not getting out the trade. Now, if you got your stop loss down here, you're not going to, and you see that market structure has broken, are you going to sit there and just let it eat up your money till you reach your stop loss, or you just going to exit out the trade yourself?
Exit out the trade.
Exit.
Right. Okay. Let's finish.
Full structure. You're not taking it, putting it up here, down here. You're leaving it right here because the price came down, bounced from here, and made this high. And you're still expecting price to come down within this zone.
Price can play around in here all day. We're not getting out this trade until this structure is broke.
And bounce higher. Now, until it bounces higher, okay, watch this. As soon as it bounces up higher, okay, now we have our new zones. Okay, so here's our structural point because it bounced from here and made.
Now, you got to move the structure. Why? Because of this peak right here. Finally, you see this level? Finally went higher than the recent high, right?
Yes.
So once it crossed this area and got us a new higher high, now we can move structure to that low. And we're going to move this line to our most recent high. Okay? Does that make sense? Is everybody getting it now?
Yes. I just have a quick question.
Yeah.
Uh-huh.
So like for the first the first market structure, at the beginning, once it breaks past that or goes past that market structure, would that be considered now a bearish trend?
Yes, but that never happened. It still hasn't happened. We're still bullish.
Okay, and I was just saying for like hypothetically if that was to happen.
Yes, if it was to break structure at wherever it is, if it's here or over here, once it breaks and creates a new lower low, it's really considered bearish after the break.
Okay, got it.
But once the lower low is created, once it break and do the retest, that's what allows you to know now where your structure is going to be. Does that make sense?
Yes, thank you.
No problem.
A new high. These weren't new highs. So once price bounces from here, this is now our structure. And the recent high is now our area.
So now we know that price can come down to here and go up. We know price can come anywhere in between these two levels and go up. We know that price can come all the way down to structure and go up. We don't care what it do in between here and here, as long as it doesn't break. We're staying in the trade. Okay, so that basically sums up everything. This video here is just a video of him continuously showing you these market structure changes. So does
Andrea, I'm sorry. So, okay, so now we're still in the buy, and even though it's going down and up and down, as long as it doesn't break this market structure, you're still in the buy. You're still
gonna stay in the buy. Now
are you still making, okay, so at that time, are you making money or whatever?
Yes,
you know what I mean?
yes, because we entered that buy. Let's say we entered that buy here. So you see where price is? It's like 116.5. Let's say we got in at 116.5. Right now we're at 119. Yes, we made money. We caught pips from here all the way up to here.
Okay. I didn't know, like, if it changed because it's going, it's going down and up and then down and up.
Yeah,
like
but listen, you would still, like, if we entered, let's say we entered here, right? Let's say we entered here. So if we enter here for a buy, even though it's going sideways here, we're still in profit because we gained profit all the way up here. We're still going to be in profit.
Okay. Got it.
I'm going to fast forward because I believe he shows some bearish. Well, let's look at one bearish example and then we'll conclude tonight, okay?
Okay.
One more thing I thought was pretty cool. Okay, so we're going up.
He's still doing uptrend.
Right. So this is what price is doing. Okay. So look, you can throw on your handy dandy trend lines. Right. So this is the trend you're in.
See, that's valid. We got two
cuts. So you can kind of put this together. And you have your structural low. Okay, structural low and your recent high. Boom, in an uptrend. This is a downtrend, it'd be the other way. I'll show you that in a minute. So once price breaks this recent high, that's when you establish this. So this area over here, you don't even have this established until this has broken this high. Now we have this, our retracement is going to come somewhere in between here. We are bullish until this breaks. Price shoots up, breaks this high.
I want to show you guys a bearish one before we leave. So we're getting ready to watch that right now. But does everyone see how you see the structures right here? We cannot move this structure because this structure was put here because of this high created. So we can't move the structure to here until what? A high that's higher than this one is created, which is here. Does that make sense to everyone?
So we're not going to move that structure to the next one.
We will, but we can't do it until this high right here is broken.
Right.
So once price gets here, then yeah, we move this to here. We're gonna move this red line to here.
Okay.
We won't be able to move it to this one. We won't be able to move the structure from here to this one until this high is created to surpass this high. And then we'll move this pink bar that's here. We'll move it here. We'll take this bar, which is located here, and move it to the next level. And as these highs are created, we'll keep moving the structure. Write that down in your notes. You move the structure once a new high is created. That key right there is going to help somebody. Do not move the structure until a new high is created. This was our high. We got the structure when this was made. We can't move it until we get a new high here. We got to go past this point. Once we get here, then we can move the structure to here. Does everyone understand that this is so important?
Yes.
Yes.
Okay.
Yes.
All right, let's find a bearish example. Let's watch that and we'll be done for the night. Okay, right, here we go.
Just so y'all fully understand, there's no confusion there. So on a downtrend, coming down, right? Okay, this is our downtrend. Now, on an uptrend, the structure of things are on the bottom, right? But in a downtrend, okay, as soon as this breaks this low, here's your structure. Okay, and downtrend is
It's
just
the same thing, it's just the opposite. So when we came to the chart, let's say price was here. We watched price move, right? We couldn't draw this in the downtrend. We couldn't draw the market structure until this low was broken. You see this low here? So once price passed this level, we got a new low. Now we got structure. Everybody see that?
Yes.
So now you know how he was carrying the market structure, taking it down. We won't be able to move it until we created a lower low. Let's watch this one.
flipped. So that's your structure. Here's your recent low. Price comes back into this zone. You wait for a bear signal anywhere in here to sell down. Now, once price breaks this recent low, that's when this moves over. But it only happens if price breaks through the low, okay? All right, so once this breaks, okay, we pull these over, it comes back, it shoots off, and as soon as this high breaks, as soon as this low breaks, this becomes the recent low, and this becomes your structural point here.
Does everybody understand what's going on? It's the same thing, it's just flipped.
Yes, we got it.
Yes.
You got to create a new lower low in order to move the structure. Once you move the structure, you want to use the line to mark your lower low, because we know that price could come and play anywhere in between here, right?
Comes down, just touches the recent low before heading back down, does make, so we'll swap these out, does make a lower low, so these will move here. We'll be expecting a retracement through here and continuation. So say I'm looking at this, right, and I'm thinking, okay, it's the same thing. So say price came through here, touched this low, comes back, comes up here, right? Say it does this. What are you doing?
Are we still in the trade, you guys? Are we still in this sell trade?
Yes.
Bearish, yes.
We have no reason to get out. Does everybody understand that?
Yes.
Yeah.
All right.
Yes.
Well, I feel confident that everyone on here understands market structure, knows how to follow it, knows how to move it as price moves. Does anyone have any questions about anything that we went over today?
Well, what kind of time frame are you looking at when you got to do all this?
Once you get started with marking up your charts, it's going to be kind of somewhat foreign to you. It's not something you've done before. However, the more time you put into marking your charts up, the quicker you'll get at doing it. And you'll be flying through marking, you'll be marked up every chart for every pair that's moving during that session in no time. It doesn't take long at all.
Okay, I got
you. It seems like a lot because you're learning all the tools needed individually and you learning them in depth. But next week when we put all this together, it's gonna take you less than a minute to do your support and resistance, less than a minute to determine the trend identification, less than a minute to see where your market structure. Like, it's gonna happen fast. You're just learning it in depth right now so that you can be able to be more fluent with it when you get ready to do it.
And the demo accounts, are those that's located on the trading view as well, the demo accounts?
No, the demo account you have to set up on MT4.
Okay.
On the, let's see, are you in the Operation Promised Land group?
Yes, I am.
Okay, so there is a post in that group that has 2 videos that shows you how to set up a broker and connect it to your demo account.
Okay.
Okay. And they're actually on the new 2-week syllabus. Look inside the group and look for the 2-week syllabus for class 2.
Okay, thank you.
No problem. Anybody have any questions?
Andrea, the trading view is where you would do live trades, or is that in the
No,
MetaTrader?
the trading view is where we do all this marking the charts up, how he's drawing this market structure. This is where we do that. Okay, now trading view, this right here, he's just using part of a screen where there's no price action. Price is probably way up here in the corner somewhere. Trading view, when you open it, it's going to be live and it's going to have the candlesticks. And that's where you use these tools to draw on. And then you're going to place the trade in MT4.
Oh, okay, gotcha.
Oh, okay then.
I highly recommend that everybody put trading view on your computer. You're going to want to do your markups from a computer. It's really convenient to do your markups on a computer at trading view and then place your trade on MT4 on your phone.
So will the markups be on your live screen when you go to place your trades? When you're marking it up on TradingView, will that transfer
How does
over?
that work?
No, it doesn't transfer over because it's not connected to MT4. However, you can see the candlesticks and you can see the live market on MT4, but it won't have any of your markings on it.
Okay.
But
so I highly recommend do your markups on TradingView on a computer.
But in TradingView, you can see the movement as well as in MetaTrader 4.
Yes.
Okay.
It's live and it's moving while you're doing your markups.
Okay.
So that's the reason why you want to do it. So then when you go to your live trade, you'll be able to know what to do.
Yes, you gotta, because you don't want to just like open up a chart, look at it and say, oh, it looked like it's going down. Let me jump in a sale. As soon as you jump in, it could be in retracement. It could be have retraced to where it's in broke structure and about to go the opposite way.
Okay. Okay.
So you basically come to TradingView. This is where you know how, okay, so like football, you know how the coach, come up with the game plan, come up with all the plays. This is where you coming up with the plays at. This is where we gonna determine, we trying to see what we gonna do in these markets, what trades we gonna take. You have to come here first. This is our planning.
Understand.
That's why they have on computer screens up.
Yeah.
Yes, exactly. Okay. Does anybody else have any other questions? All right, with that being said, let's look and see what we got for homework tomorrow. Well, tonight, we're going to be doing day 4. It's in the intermediate section. Can you guys see my screen? Can you see my screen?
Yes.
It's in the intermediate section. You got 1, 2, 3, 4 videos. Look like about an hour and maybe 30 minutes. Okay. Market structure. We're going
I
to
see
get
a lot of
into,
market structure going on.
I'm telling you, it's the meat and potatoes of trading. If you understand market structure, it's going to bring so much value to your trading. Okay, so as you can see, we got it tomorrow and we're going to have it on day 5 too. So make sure you're here so you can get a complete understanding of what's going on. Okay.
Are we doing this? We're doing the complete 2-week syllabus, Andrea, or just
Yes,
the
we're
2
going to
weeks?
run straight
Okay.
through. So on the weekend, you will have homework. It's going to seem like a lot, but it's not. Because on the weekend, I'm going to ask you to do Saturday, Sunday, and Monday's homework.
Gotcha.
It's really not a lot because you have from Friday night when we get off all the way until Monday when we get on at 7 to get it done. And then that way, when we meet back on Monday, we'll be able to we'll go through all 3 days. I'll have down exactly what we need to look at. We'll be able to get it in within an hour and a half, 2 hours.
Okay.
And these videos are located on Chadera.
Yes, you're going to go to Chadera. You see here, I say it says intermediate section. So you're going to go to Chadera. Let me show you. Go here and then go to your Trade Academy.
Okay.
And then scroll down. Oh, well, I'm already on a video, so let's see. And you're going to go to the intermediate section.
Okay, got it.
Okay, so just follow the syllabus and watch those videos. It'll be best if you watch the ones for tomorrow before you meet up. And that way, if you have any questions, it'll just bring more clarity to you. Okay?
Thank you.
All right, no problem. Anybody have anything else before we conclude for tonight?
Yeah.
All right, well, thank you guys for showing up.
Thank you.
Homework
Thank you,
for tomorrow.
Andrea.
No problem. Homework for tomorrow is going to be day 4, market structure training videos, 4, 5, 6, and 7. I'll meet you guys back here tomorrow, 7 p.m., same link, same password, same time.
Thank you.
No problem. Thank you guys. You have a good night.
You as well.